If you started investing in late 2020 or even in 2021, your brokerage account is in the red right now. The S&P 500 is down just about 15% year to date. The Dow Jones Industrial Average is down over 10% year to date. And month after month, the stock market keeps dipping lower and lower. And that is why in this video, I'm going to talk about 6 reasons why the stock market is crashing. Also, if you take a look at the cryptocurrency market, that is also crashing as well. Bitcoin down nearly 40% year to date. I actually covered the crypto market in a previous video. You guys can go back and watch yesterday's video. That one was about 6 reasons why the crypto market is crashing. But let's talk about why the stock market is crashing right now and the real reason behind it. And of course, just before we get into that, a quick reminder, if you're new to the channel, my name is Eann, and on this channel, I talk about ways to make money, ways to save money, ways to invest your money. I talk about bank accounts, credit cards, business ideas, just about everything to do with personal finance. So if you like these videos and you like these types of topics, be sure to give this video a thumbs up. It's 100% free, won't cost you anything. Also, be sure to subscribe with the notifications on. That way you never miss any of the future updates of when I post new videos on this channel. Also, guys, if you ever want to talk to me one-on-one, you can message me on Instagram. The link will be down below in the description. And with that said, let's jump right into the 6 reasons why the stock market is currently crashing. Now, the first reason why stocks are crashing is because the Federal Reserve has begun increasing rates. So for example, on May 4, we had a 0.5 percentage point hike, and there will be several more of these rate hikes this year. And each time there's an increase in interest rates, the stock market usually goes down because now it becomes much more expensive for businesses and also individuals to borrow money. So an example here of how this works is that interest rates go up, and so consumers now have to pay more interest on their credit cards or on their loan products or on their mortgages that they have. And because of this, the amount that they can spend on other things decreases. And so because they have to spend more money now on their bills or more interest, they're now going to be left with less disposable income. So when people have less disposable income, they have less money to spend on things that they want. And so businesses will suffer because people are no longer going out there and buying as many things and spending as much as they would. So the profits of these businesses are going down. The revenues go down, and because of this, it in turn affects these company stocks because they're not making all that money that they were making before. So keeping it very simple, that's the relationship between rising interest rates and the stock market going down. When interest rates go up, people have more costs associated with borrowing, and so they have less disposable income or less money to spend on what they want. And so they don't go out there and they don't spend their money at these businesses, and then the companies don't make enough revenue or enough profits, and so the stock prices or the stock valuations go down. Now, usually when interest rates go up, there isn't a sudden impact on the economy, but there's always almost an immediate impact on the stock market. And so because we know that interest rates will be going up a few more times this year, that way we can expect to see the stock market going even lower. So that's the reason number one why the stock market is currently crashing. Now, the second reason why the stock market is crashing is because people are fearful that there is a recession just around the corner. And this is actually a very valid fear because a recession by definition is an economic decline for 2 consecutive quarters. So we're already experiencing a decline in the first quarter of 2022, and we're now in June, so we have just about 3 weeks to end the second quarter of 2022. And if things don't turn around within these 3 weeks, which is also very unlikely, then this will be the second consecutive quarter of economic decline. And that means we will, by definition, officially be in a recession. Now, this may have a lot more to do with psychology, because if people are fearful that a recession is around the corner and they're seeing the signs like right now and they're thinking that in 3 weeks we're going to have a full-on recession, then people are going to want to stop spending money. Instead, they're going to try and hoard as much money as they possibly can. And also, people are going to stop investing in the stock market because they're going to be fearful that the stocks are going to crash even further. And again, this is a very valid point because that may just be what will happen. In fact, this is one of the reasons, or one of the main reasons, why I'm currently not buying the dip. And by the way, this is not financial advice. I'm definitely not telling you guys what to do, just my own opinions. But currently, I'm not buying the dip because I expect the dip to be lower. And so people are fearful that there is a recession coming right around the corner. And because of this, stocks or the stock market is crashing hard. Now, reason number 3 why the stock market is crashing is because of COVID. And I know you may be saying, well, Eann, COVID is almost gone. It's not as widespread as it was a year ago. And while that may be true, we're still experiencing the effects that COVID had on the economy. So, for example, China seems to still be struggling with COVID, and that is having a negative impact on our supply chain. So we have the chip shortage and other important goods that we need to import, and we're not able to import them at the pace that we would have been able to import them at pre-COVID. So because of this, again, this is affecting these companies because they're not able to produce goods and services at the rate at which they would have been able to do so pre-COVID. And because of this, they're just not making enough money or not as much money as they were making before. So again, the stocks are going down, and for some reason, this has been going on for quite some time now, but it hasn't been reflected in the stock market because there were a lot of companies that weren't really making a lot of money, but the stock price was skyrocketing, and now that is beginning to change. Now, this brings us to the fourth reason why the stock market is crashing, and this is because of the war in Ukraine. And you may be saying, well, Eann, what does this have to do with the US stock market? And it has a lot to do with it because this is also affecting our supply chain as we're not able to import a lot of important resources because of this war, right? So for example, I recently found out that there is a special nickel which is 99.8% pure, or it needs to be at least 99.8% pure, and Russia supplies about 20% of that first class nickel, and that precious nickel is actually needed to produce stainless steel, also batteries used in electric vehicles, and a bunch of other useful things. So this one resource affects construction because they need steel, and also just about everything we use that has some form of steel in it. Now, Russia and Ukraine are actually both key suppliers of food, fertilizers, grain, and a bunch of other things that are necessary for our livelihood. And so because of the war, we're now seeing a decrease in the levels of these imports. And again, that is causing the stock market to crash. Now, this brings us to reason number 5, which is all the stimulus that was pumped into the economy just about a year and a half ago. And while this may not seem like a big deal, we had low interest rates and stimulus, which means that people had money to spend. And so they could go out there and they could spend money at these businesses. They could pump up revenue and keep stocks afloat. However, that stimulus is now gone. Interest rates are also going up, and people don't have a lot of disposable income anymore. So the stimulus is gone, and this is another reason why the stock market is crashing. Now, the sixth reason why the stock market is crashing is because of quantitative tightening. And actually, let's go back a bit. So there was quantitative easing before, and simply put, what this means is that the central bank was the biggest buyer in these markets. So they bought mortgage-backed securities and treasury bonds, and this was in the trillions with a T. So they were actually the biggest buyers or biggest players in these markets, but now they're switching and we're doing the reversal, which is quantitative tightening. And all this means simply is that they're going to stop buying in this market and they're going to unload their balance sheet. And I believe at the time of making this video, this is right around the mark of 900 trillion with a T. So that is another reason why the stock market is crashing. And it's really likely that the stock market is going to dip even further. Now, if you got into the stock market last year or within the past 18 months and your stock portfolio is going down, I wouldn't tell you to sell. Again, this is not financial advice, never financial advice, just my own opinions. But if I were in that position, I wouldn't sell. I would just revisit my investing strategy. I would actually start looking more into broad market index funds. And another thing that I would do is, or that I'm currently doing, is I'm not buying the dip, because I think that this dip is temporary and is going to be dipping even further very soon. So I'm not selling my investments, but I'm not buying the dip also. I'm just simply waiting around for probably another 60 to 90 days to see how the market reacts to all these changes. And then I'll start thinking about what I should be doing with my stock portfolio. Now, I personally think the market is going down even further, and so I'm waiting around, and maybe then I will buy the dip. But as of right now, I'm taking a break from the stock market and I'm focusing on other things that can actually increase my income right now, because I think that is the best thing that anyone could be doing right now. Instead of worrying or focusing on stocks or crypto, focus on increasing your income and lowering your spending, and that way if the dip gets lower, you can actually buying at the right time. So these are the 6 reasons why the stock market is currently crashing and why it may be crashing much more in the very near future. And with that said, comment below, let me know your thoughts. Let me know if you agree with my points in this video, or if there are any other points that you'd like to make, comment them down below, let me hear them. And with that said, be sure to give this video a thumbs up, subscribe if you like the content. Also, if you guys ever want to talk to me one-on-one, you can find me on Instagram, the link is down below in the description. And as always, thanks for watching, and I'll see you guys very soon in the next one.